Welcome to FundView.co.uk, a website that gives you a unique and radically different view of investment fund performance. We're starting this introduction by looking at a typical UK equity fund and seeing how easily you can find an alternative that has a better record of performance without compromising consistency or risk. The fund we're starting with is the UK Growth Fund from Scottish Widows. This fund isn't especially a low performer, but it is typical of funds run by the big institutions. And with total assets of almost £3 billion, it is one of the biggest within its sector. Remember, that's £3 billion of money belonging to investors like you and me. Now, this is the profile chart for the Scottish Widows Fund. Each point on the chart represents the annual return produced by weekly investments in the fund over the last 10 years. On the profile chart, these returns are plotted against the relative change in the market index between the time of investment and the current date. This gives a unique view of the fund's overall performance, how sensitive it is to market changes, and also the consistency of the returns. As might be expected from an equity fund, this fund has produced better returns as markets have risen, but we cannot rely on unsustainable market buoyancy to generate long-term returns. With a stable market, this fund has produced returns of only about 3 or 4% per annum. And when the effects of inflation are taken into account, that's only 1 or 2%. Not really enough to tempt most investors away from cash savings, even with today's low interests. There must be better prospects out there in the market that don't bring significantly higher risks. Let's spend a minute or two researching. Start by going to the selectors for a comparison fund. To limit our search to the same sector, we will filter the categories to UK All Companies, and in the sort option choose Suggest by Base Return. This isn't a definitive ranking, it's merely an approximate screening for the most likely candidates. The first fund we'll look at is the Cazenove UK Opportunities Fund. You can see the results plotted in blue. The returns are much better, but there's a greater spread of returns, indicating a less consistent performance. Now, you might be quite happy to trade off this variation for the potentially higher returns, but let's look at another candidate, the Majidi UK Growth Fund. This fund's profile shows the same high degree of consistency, a similar sensitivity to market changes indicated by the slope of the points, but with significantly better returns. In fact, the returns have been better than the Scottish Widows Fund by around 6% in all market conditions. That equates to an annual saving of £700 on the investment of just 1 year's ISA allowance. Now, we have no desire to promote this fund. There are without doubt funds that would better suit your investment objectives and attitude to risk. But I hope we have shown here how the FundView website gives you a much clearer picture of how investment funds have performed.